Greetings and salutations, fellow trading enthusiasts. I am David, stepping in for our usual host who's currently on the move. My background is steeped in the financial markets, and today I bring to you a trading methodology refined over a quarter of a century. Today's discourse is a detailed analysis of the Dow Jones Industrial Average, a topic that was once covered in an older video by our boss. The Dow Jones Industrial Average, a benchmark that represents the health of the American economy, has seen significant movements in recent times. Picture, if you will, a purple line at the top of your chart. This line signifies the all-time high for the Dow. A red dotted line, a remnant from the previous sell-off point, serves as a grim reminder of where traders once placed their stops. In the closing days of October, we observed a new low slightly under 32,500 points. However, as November dawned, the index took flight. The only time it paused for breath was at the line from the previous sell-off, after which it powered ahead. This surge, a solid 5% climb, was only interrupted by a single day's pullback. The strength of the Dow Jones Industrial Average was apparent in its continued climb with no significant pullbacks. Now it sits just under its all-time high, consolidating sideways. This pattern suggests an index that is incredibly strong. A bear trap at the end of October was a turning point, igniting fear in shorts who hadn't covered in the ensuing rally. The prospect of the index crossing the all-time high line has them quaking in their boots, for they know there will be no quarter given. Zooming out to the weekly chart, it's clear that the all-time high for the Dow was set back in November of 2021. It's been a 2-year wait for money managers and portfolio managers itching for the Dow to reach its all-time high. The promise of a lush Christmas bonus has them all on tenterhooks. A glance at the weekly chart from November until now shows no pullbacks, only a sea of green. The Dow Jones Industrial Average has soared almost 12% in a single month, without any significant pullbacks following a colossal bear trap. This is a textbook example of a short squeeze. As we approach the end of the year, any pullback is likely to be viewed as a buying opportunity. That wraps up our analysis of the Dow Jones Industrial Average. Join us next week when the boss returns with his old school charts. Until then, this is David signing off for Only Trade to Win. Enjoy your weekend and see you next time.